Welcome to the Gray Report. I'm your host, Spencer Gray. If you are an active investor, passive investor, someone in the multifamily industry trying to make sense of it all, you're in the right spot. Every single week on the Gray Report, we're breaking down all the latest research data and bring on some of the best original opinions in the industry. So strap in. We've got a great episode, exciting guests coming on the report. Mr. Grant Cardone. How you doing, man? Great seeing you.
Good, Spencer. Good to see you, man. Good. I love your office, by the way, as I was telling you.
Yeah,
It's
man.
fantastic.
I appreciate it. Want to build a good culture. Want to build a place where our employees can come and be comfortable. It feels like home. We've got a flexible, policy that if you want to work from home a little bit, you can. But we've got a culture where everyone wants to be in the office. You just can't replicate the energy, and I wouldn't do it any other way. So I appreciate that.
Well, we have a flexible schedule, alternatives here too.
Yeah. Do people do it, or people in the office?
No, flexible is, hey, show up at the office or stay home, and then you don't work for us. That's the flexibility we have here.
Yeah, no, I feel that too. I think we go for the illusion
in Miami,
of choice.
Though, dude. I'll lose people down to the
beach,
South Beach. Yeah, exactly.
Yeah, man. There's a lot of distractions. Not as many here in Indianapolis. Got some good things going on, but we don't have Miami Beach. Well, yeah, Grant, I've got a lot I want to talk to you about. Biggest thing is real estate, multifamily. The market has been challenging to say the least. It's frustrating, but it's these are the times of adversity where the biggest opportunities are going to show themselves, and that's where the most wealth is going to be created. And I think it could be one of the greatest wealth building opportunities, at least in the next decade, if not a generation. And people have to be ready. Fear's overcoming a lot of folks right now. Billions have already been lost. Billions are going to be made, without a doubt.
Somebody's going to make money.
Somebody's going to make money. Bill Ackman's, he's already making a couple $1 billion. I mean, there's people making money right now. There's deals being done. It's just, you got to turn over every stone. You got to work 10 times as hard as you used to. Just the amount of action that's going to be required right now. Before we get into that, though, you're a guy who, you've got so many things going on. You've got different lines of businesses, but I know you also hyper-focus too. Because you got to really focus on, you can't be spread too thin. So, I'm just curious right now, what are you hyper focused on? What's going on in your business that you're excited about?
Yeah. So, I saw your post yesterday on LinkedIn about not only are you proud of what Gray's done, but what you guys didn't do.
Yeah.
And I think in real estate, particularly, or any kind of form of investing, right? It's you get basically, criticized or admired for what you did, but so many people behind the scenes miss what you didn't do.
Yeah.
And not doing deals, stopping on a deal, not going the extra, we were being outbid on Blackstone with Blackstone. We were buying these, as big core apartment complexes.
Yeah, big luxury deals. Yeah.
$140 million. And Blackstone would come over the top, dude, after we all pushed each other up 2 or 3 different, series of bids, then they would come over the top another $12 million. Like I was already into the ether of thin air, trying to make sense of a deal because of the location, the asset, and I believed in the future. And the next thing you know, they come over 12 million. One deal, 18 million. One deal we were doing in South Florida, I think we were at 240, massive project. They offered $49 million and bought it more than I paid. And there's no way those deals work today.
No, there's no way, because they didn't really work. They hardly worked back then when interest rates were low and you're modeling 10% rent growth. Well, rates are, not where they were, 12, 18 months ago. And, rent growth is not exactly where it was either. So, those deals aren't working. What's about, the discipline it takes to say no? Because, on the other side, obviously, our businesses grow by doing more deals. And it's it's a way to, exponentially scale your business. Doing big deals pushes the envelope from, income to being able to grow the team. So just talk about that. I guess sometimes saying no.
Yeah, sometimes you just it's time just to clean the boat and the equipment, right?
Yeah.
And sometimes the fish just aren't biting. And right now, for the last really year and a half, we've been out fishing. I go out every night.
Yeah.
We light up and we go out and we throw our bait and we're looking and we're searching, but we just couldn't bring anything to the boat.
Yeah.
We've done fewer transactions, and the whole country has. I think commercials off 70%
Yeah. Yeah.
transactions over last year. The guys want to sell, people want to buy. I mean, it's sitting there waiting to happen. I think it's about to unleash.
Yeah.
In the meantime, we go back and look at our assets. We look at what we need to tighten up on our operations, what we need to do to tighten up on CapEx on any of the properties. Where have we been inefficient possibly? We just did a trip, spent 3 days in London,
Cool.
talking to Lloyd's about insurance. We're about to go to New York and not Turks and Caicos, but Bermuda.
Bermuda, get that reinsurance conversation
just
going.
have those conversations. Yeah, so they see who we are. That would be a
Yeah.
really smart trip for you guys to do, by the way, if you
Yeah.
want to, if you want me to introduce you to the guys, because
Appreciate that.
the insurance, when they're quoting you, they're just quoting a spreadsheet.
Yeah.
And you really want them to think about, oh, Spence and those guys, they run a great operation. Let me maybe do a little more work on it. So that's what we've been doing right now in this period of really no harvesting. We're planting seeds again.
And you really don't have too much choice, right? Because I mean, the world's kind of changed with inflation, expenses. I mean, you brought up insurance. I mean, you're heavily invested in Florida, and Florida's ground zero. Florida and Texas for just huge increases in insurance costs, and the CPI report that came out this week, and a lot of conversations is just the whole economy right now, not just Florida, it's almost uninsurable right now, and that's doing crazy things to expenses. So what I've learned about financing, working with the agencies is that they've got a box, and they say that you fit in the box, but then they say, well, if you got the relationship, you can go outside of the box, and it's all about a personal relationship. And I'm assuming insurance is the same thing. You want to fit in the box, easy to underwrite, get through, whatever approvals. But if you got the relationship, you can get those exceptions, because if they know, okay, Cardone Capital can do X, we know what they do, their systems, you can probably push it. Is that the case? What you're finding out?
Yeah, look, I mean, real estate is, there's a little hint there, real, and all the way down to the relationships, right? If these people haven't met you, they're not going to check the box in your favor.
Yeah.
Particularly when things are negative, like with insurance or rates or whatever the case is. It could be a lender. I mean, lenders, that's a whole nother problem right now. Okay.
Yeah.
They're not even, it's not you, they're checking themselves. I mean, like they just don't, they want to help get you in the car's full.
Yeah. Yeah.
And so the whole system right now is very, very, this is good news for the patient and the discipline. Back to that first topic, right? Dude, you can't learn discipline. Like, you cannot read about it. You cannot go to a workshop on it. You can't listen to an audio tape about it. I guess you could, but there's only one way to build vitamin D, and that is not doing a deal. And you're going to be punished along the way, not doing a deal. And then you're going to look up and say, I should have done that deal because I would have made a bunch of money. I've lost more money not doing deals than doing deals. And I've avoided losses by not doing deals. Now, the experienced real estate guy or gal has to do and not do deals to learn that. Like, there's just no other way. Or you got to have some kind of parameters where you're like, hey, if these boxes don't check, I'm not doing it.
Yeah.
Including my gut. I need to know my gut. But as you know, Spencer, like, if I got enough time, none of that really matters. Like, even that Blackstone deal I was talking about earlier, where they overpaid by 49 million. If they have 10 or 15 years, it will not matter.
It'll be all good. Yeah. That's the great thing about real estate. If you can give yourself the time, and that's where people get in trouble, is they don't give themselves enough time. They put their back against the wall, and they let time work against them rather than letting time work for you. Because real estate, it's going to go up, but you don't, so in 10 years, the value is going to be more. It might be double. But in 3 years, who knows? We're going through right now. And when it's going to recover, could it be the end of this year? Sure. Next year, couple years. If you've got a short-term business plan, you're rolling the dice.
You just got to be right. You got to be right. And you have to be right now.
Yeah.
Now, I want to be right. I just don't care when. Like I always say, man, don't go. I had somebody introduce me. Who was it? They didn't introduce me. It was a comparison of a group. They were on Real Deal the other day. big group. They did 30,000 units, and they opened the pitch because they all do nasty. They do nasty headlines over there,
Oh yeah,
right?
Real Deal. Yeah, it's their bread and butter.
Nasty.
Yeah.
And look up Real Deal, and about 3 days ago. And anyway, they said, unlike they don't do podcasts and they don't crowdfund and they don't sell courses. They were referencing me.
Mm-hmm.
Right?
Yeah. Yeah.
This group did everything right and still got themselves in trouble. And
I saw that. Yeah.
Yeah. I forget who that was. Was it AVI or AGI or?
I forget the company, but I remember it was a younger guy, bought a bunch of deals. And yeah, basically the premise was did everything right, but still in trouble. Well, there's a lot of people that aren't in trouble. And so, what did they do more right than this guy?
Yeah.
And again, I don't take credit. We've got a good track record, 30% IRR over the last, 7 years, 9 years now. But it's
amazing, dude. GVA is the company.
GVA. Yeah. Oh yeah. Well, yeah. Well, and I know folks that invested with those guys, and it's a total loss. I mean, total loss. Maybe they're going to get some peanuts in 7-9 years, but it's gone. They're writing it off.
Yeah,
and these guys are supposed to be some of the best.
Yeah, they bought all value add. This is the article.
Yeah, older stuff. Yeah.
The head of GVA, one of the Sun Belt's largest multifamily syndicators, is an anomaly. Alan Stalcup didn't use get rich courses, nice. Social media, and podcasts to rage use some. So anyway, they were referencing me. I know. I mean, like, first of all,
you're the 1,000-pound gorilla. I mean, you're the face. I mean, you've really pioneered real estate crowdfunding. I mean,
but back to this topic about time. Okay. Yeah. I have never suggested to anybody get rich quick.
Yeah.
Like, if anybody wants to get rich quick, you need to pick a different vertical than real estate. Real estate is slow.
For real.
It's patient. Like, if I want to get rich, I'm going to go do some event and fill a room up with 10,000 people and I'll pick up $10 million. Like, yeah. Or I'll go do a podcast and sell a $99 product. People see me do this all the time. There's no secret to what I'm doing. I want to get money. I go get money. I want to preserve money. I'm going to park it in a real estate deal and wait.
Yeah.
Like, literally, I will be 75 when I see the deal again. Like,
yeah.
And that's for anybody that's thinking about getting rich quick. Real estate is not the cycle. It's a place to go bankrupt quick.
Yeah. Yeah.
Okay.
Seriously.
And that's why we don't have a time horizon on our funds. I'd love to talk to you about, like, anybody, when you're offered a 3 or 5 year out. I was having this conversation with a big giant group yesterday, 80,000 units.
Yeah.
Why do you guys agree to a pension fund to pay them back in 3 to 5 years? And he's like, well, because they want their money back in 3 to 5 years. I'm like, yeah, but bro, it's not good for them.
Yeah. Yeah.
Because 3 to 5 years, if you're in a bus cycle.
Yeah. Good luck.
Like we are right now. You're not going, cap rates went from 3.5 to probably 5.5. You're gonna lose 30% of the money. Why would you put that? He's like, Grant, we only put it there because the investor requires us to.
Yeah.
And but it's not good. And for anybody listening right now, anytime a fund offers you an out early, okay, it is really not good for you because no fund manager can predict what things are going to be like in 3 years. And you don't want to lose money. You don't want to sell in a bad cycle. Okay. And you definitely don't want to try to sell an asset when there's no liquidity in the marketplace like there is right now.
Yeah. You have to have multiple exits. And one of those exits has to be, we're going to hold it for an indefinite period of time. Because again, you will be successful in real estate if you have time. It's only if you don't have time that you're going to run into trouble. So, hey, you were in Chicago. I heard you were in Chicago, New York, looking for deals. What kind of markets are you looking for? Because those aren't the markets that I typically think that you guys would be looking at. I mean, high tax, high regulatory environment, but no one else is looking there.
Yeah, I thought this year, I was going to be able to go and buy. Look, I'm open to anything. No matter what people hear me say. I see the dog behind you.
Yeah. Dog friendly. You got to get people out of the house, get them to the office, bring the dog.
Bring your dog, bring your kids, bring your
exactly.
wife.
Just get here.
So look, I trashed New York. I verbally trashed New York, Chicago. San Francisco, Los Angeles, and then the next thing that you know, I'll buy 1,000 units there, and people
Yeah.
are like, "Why are you trashing those places?" Because they're trashy. But
Yeah.
the moment things are good again, or I can buy something cheap, or I could steal something, I'm gonna go back there and do that.
Yeah. Yeah. Those
And
core
so,
markets.
yeah, we were trying to buy New York this year, and then they ruled against Trump. We were flying back from Austin. We were looking at real
Yeah.
estate in Austin, which that marketplace is going to get trashed. I don't know if you've been in Austin or
No, it's getting trashed right now. I mean, the supply
dude,
coming online, but 5 year again, time. You got time,
yeah,
it's going to
enough
work out.
time. But right now, it's going to be very, very painful for anybody that bought in the last 2 years. I mean,
Yeah.
it's going to be like there is no exit
No.
for years to come there because of the supply coming on. But so anyway, we're in New York. I'm looking at no, we're in Austin. We're flying back, but we had been shopping deals in New York, actually aggressively underwriting some deals. And my wife says, "Look what happened to Mr. Trump, President Trump. He just got this big $355 million award against him." I'm like, she's like, "You should start a GoFundMe account." I'm like, "Hey, I don't have time to start a GoFundMe
Yeah.
account.
Yeah. Yeah. Raising for
You go
deals.
start a GoFundMe account. I don't have time for that nonsense. I need to pull my team off of all the deals we're underwriting right
Yeah.
now in California and New York." And we were working a big deal in Chicago at the time.
Yeah.
And I said, I am not going to invest money in markets. Forget all the other problems, immigration problems, tax problems, you can't evict problems, you can't raise rent problems. But dude, when the judicial system is weaponized against the property owners.
Yeah. Yeah. Business owners, property owners, especially high profile ones.
Yeah. Like at top of the food chain,
Yeah.
when they put sanctions on the Americans. I mean, Donald Trump, you might not like him, but he's not Vladimir Putin.
Yeah.
When you sanction a guy that's lived in a city for 75 years and you give sanctuary to people that haven't lived here 75 minutes, that's a problem.
Yeah.
So I said, hey, get out of all those markets, wait until all that settles out, and then we'll go back and look at them.
I think it makes sense. I mean, I'm one that the regulatory environment, the taxation regimes, just the fact that those markets aren't being managed well, that I know they're going to come after the property owners if they need money. That's the first people they're going to go after. So that's, that's kept us, out of markets like Chicago, because, we're in Indianapolis. Chicago's right up the road from us. We keep looking because at some point there's some awesome pockets of growth. Yeah. But, I remember just a couple of years ago, they in Cook County, property tax assessments, basically doubled, and it froze the market. And so it's just it's a hard market to make sense of and just to roll the dice on. But at the same time, these core markets that international investors from all over the world are always going to be investing in New York and Chicago. Those cities are never going anywhere, and they're going to keep adding people in certain pockets. Maybe not everywhere, but I think it's a good opportunity. Do you see similar opportunities in the Sun Belt? I know we talked about Austin. It's getting beat up. Phoenix is going to be the same way. The Atlanta's having troubles right now. Even Charlotte,
Yeah, but you know what? Like we're trying to buy in all the markets that you just said, we're trying to buy, dude. Like we're looking at some deals in Phoenix. I thought we were going to be able to grab them. There was so much action on these deals.
So much dry powder ready to go.
It's going to go to I said, I'm going to be able to buy Scottsdale for a 5.5.
Yeah.
Didn't get there. It's like you got guys willing to still pay high fours, 4.75, and pressing all the numbers. Yeah. Now, the thing I think that tells everybody is that these guys are looking at 26, 27, and 28.
Yeah. They're patient.
Construction's going to stop if it hadn't already. We see deals right here in Miami, which is one of the hottest markets in the country. Deals starting to have problems. Okay. Contractors starting to be able to not deliver. Deals starting to fail or slow down. And so when that starts happening, we thought I'm going to go be able to steal something. But look, there's a lot of guys like me trying to go out there and steal something. And competition determines what the price is. So if you have enough supply buyers, meaning there's a supply of buyers, that the price is going to go up because of the competition of the supply of buyers.
Yeah. No, I think that the consensus is that, all right, multifamily's got another really good run. I mean, look at this price of single family homes. Can afford a mortgage. We're going to be a renter nation. I've heard you talk about it. We're not going to own anything. People are going to be renting more and more. That's just And honestly, it's, people, complain about, missing out on the American dream. I don't think the American dream is a 30-year mortgage. And I know you've ripped on the 30-year mortgage being the product for the banks. It's not really a product for the American people, or individuals. So I don't necessarily think it's a bad thing. You want to get yourself in the right position of how that's shifting. But, multifamily's got another, good run over the next couple of years. I mean, are you of the mind, and this is what I think, as soon as interest rates come down, as soon as Jay Powell basically gives, waves that white flag or makes any kind of indication, okay, rates are coming down. The rates don't have to come down. He just has to talk about it seriously. The buyers are just going to start flooding in. And now is the time to start getting into the market and making some of those strategic moves before those floodgates get open, because it's not like it's, there's already capital floating around right now. But I mean, the thing of timing is, do you agree is now the time to get in and find those opportunities, or time to still wait it out and wait for rates to go?
Dude, 100%. Like we're underwriting more deals than we have in 2 years. And so people should get out. You should start looking at the assets. You should get your money right now, get liquidity from any places where money's dead.
Yeah.
If you're invested in the stock market right now and we're at all-time unexplainable highs, like maybe pull some of that money off the table there and get ready to buy these assets, because, consistent with what you're speaking of, if the Fed in the next 24 months starts to move downward, when you go from today, I mean, it's probably 6.5% money today.
Yeah.
All in on a deal. Maybe 6.25.
Yeah. Full debt yield. Yeah.
Yeah, dude, like if over the next 2 years, that money goes back to 4.25, which I think it could easily get there, you would make tremendous amounts of money just because the rate moved downward.
Yeah. Yeah.
That forces, that's going to force people to do short-term loans or pay cash. I don't want to do the short-term loan and get caught. So we're paying cash for deals right now. And rather than doing a refinance later, we'll just be doing our first finance a couple years out when rates breach 4%, which I believe they will. I don't believe the inflation numbers anymore. I don't believe the job numbers.
CPI came out the other day, and we did our podcast. And I said, I'm not even going to look at CPI anymore. It doesn't mean anything to me. It's all kind of made up. The way that they put the numbers together doesn't make any sense. I know what rents did 6 months ago and a year ago, and these things, that doesn't make any sense. I totally agree. I don't even know why we're looking at it.
The rent numbers they're using, if I understand this right, I heard Barry Sternlicht. I was at a meeting with him, and he was talking about the rents they're using on CPI numbers are 14 months old.
They're older.
Yeah,
they're older.
He was saying, why doesn't somebody from the Fed call my company, Starwood, and ask, we have 140,000 units. They know what the rents are. They know what the rent's done this month. Not CPI should be about now, not a year and a half ago.
No, 100%. We've been tracking it, every week and every month, and those numbers come out. It makes no sense because there's all the private rent trackers. There's all kinds of data out there that's what the Federal Reserve was looking at during COVID. When the government shut down and stopped publishing data, they started going to the private sources. Now they said they stopped looking at them. That they know they exist, which gives me an indication that, okay, maybe they actually might lower rates, not in the immediate future, but could be later this year, Q3, Q4, because they know the inflation isn't as hot as it's showing up. And also a lot of this growth, I think the economy is strong, but a lot of this is government spending. It's artificial, from the 100%. Money printing, but now there's all this fiscal stimulus. It's hard to figure out, how strong things actually are. So what's your thought on that? I mean, do you think this is the government's propping up the economy, or the economy's got some legs?
10 of the last 12 months, job numbers have been revised downward.
Yeah.
40% of all the jobs are government jobs. 33% of American public is holding a second job right now. That's the highest number in history. Credit card debt is at the highest level in history. Now, this is not hyperbole. This is the highest level in history and the highest rates in history.
Yeah.
Okay. We have the highest divide between rents and mortgage rates in history. These are, like Bitcoin numbers going to the.
And rents are still high too.
I don't think they're high. I hate to
Well,
hear you even say that. You blasphemy, blasphemy.
n-
Damn you. Okay.
they are.
Bless
No,
that.
no, no, listen, listen. They're high relative to the consumer, to the renter. They're high. They're not high relative to everything else. The way of inflation in our
I
world,
mean,
but to the
I, I,
to the
I
renter,
disagree. I disagree with that
you think the
completely.
renter thinks it's cheap?
No, I don't. I didn't ask them.
Yeah,
I think
yeah, yeah,
it's cheap. You can't ask the guy, paying 1,800 if it's cheap. What's he going to say? Fuck
yeah,
no. I want
yeah,
him
yeah,
lower,
yeah,
right? Of
yeah.
course, he
Sure.
should say
Yeah.
that. By the way, that's what he should say. He should always
Yep.
complain. I mean,
Yep.
he really shouldn't complain about the rent. What he should try to do is get a better view
Yeah.
or a
Exactly.
better deal, right? Or he should come in. I mean, there's a great way for tenants to actually negotiate with the owner and to
Yeah.
get a better deal. But what they do is complain most of the time. But people should not be complaining about their rents, because the ability to rent a from $140 million complex, that is amazing. That has never happened.
Yeah.
Where,
Especially all the amenities, the quality.
dude, I can have a swimming pool that's worth a couple of $1 million,
Yeah.
more than the average home by 8 times. Just the swimming pool. I could have a theater. I could have a little simulator golf. I don't know if you do this in any of your units,
No.
but
Well, yeah. One property, we've got a golf simulator. Yeah.
yeah, I mean, I got theater. I got security. We have you know um, VIP parking. We have place for you to store things. Like
Yeah. It's
we
cool.
high grade technology in the buildings. Great air conditioning, heat. You cannot get that in a 30 or 40-year-old home.
Yeah. And
The,
flexibility.
no,
You can go somewhere next year.
and you're locking in 30 years. The flexibility and the mobility of being able to break a lease.
Yeah.
The most you would have to pay is 3 or 4 months to break that lease, to negotiate out of a lease and have your mobility to move. That is an unbelievable opportunity. Now, I'm the one that put $140 million into the deal, and you get to come in and use the place,
Yeah. Yeah.
sometimes abuse the place. Okay.
Exactly.
I think it's a great deal. I think, and I think more owners, you and I, need to talk about the value of renting in the marketplace and giving people a great place, a safe place. These are not like the apartments of the 1970s where it was
Oh
just,
yeah. It's completely different.
yeah,
Even not even the early 2000s, just in the last 10 years, 10, 15 years, the offering, the amenity
right.
package, a lot of that's, driven, student housing starts adding all this crap. Is their parents are paying for the kids' housing. Then all the kids are used to having all the amenities, all the bells and whistles, the golf simulator, the theater, the technology, and they don't want to go back and live into a 1960s, 1970s built apartment community. Now, I think there's still a place for that. There's still people who are looking for a place that's a little bit more affordable.
Dude,
But
they don't want to even go to their grandmother's house and
yeah,
live there. They're like, I'd rather stay at my apartment. I got
yeah,
better lighting, better air circulation, better air condition, better heaters, better floors, better carpets, like better. And by the way, I have a built-in social community.
yeah, yeah,
And that's what people want today. Both baby boomers, 75 million baby boomers that are moving into retirement. We've done surveys on these people like, I don't want my home. I want my
yeah,
money.
yeah,
Look at the reverse mortgages. We're looking at going into the reverse mortgage business, right?
yeah. Cool.
Where we could
Get them
free
in
up
your apartment.
yeah, we could free up people's $500,000 or $600,000 sitting in their home that they
Makes
never have
sense.
to pay back, by the way.
Yeah, it's a good
And
deal.
they could start using that income. They could take the 500,000 or 600,000 from a reverse mortgage. They paid their home off, invest it in Cardone Capital, have the income from Cardone
Yeah,
Capital, right? And use their equity, which it's just dead.
yeah. Just sitting, not
Still,
doing anything for them.
yeah,
Yeah.
still live in their home, travel around the world, get income from, and never have to pay it back.
Yeah, that's I keep saying, looking at a home, your home, single family home as your nest egg. You have so much emotion tied into that thing. There's no way that the place that you want to live, where your kids want to go to school or whatever, is going to also line up with the best investment. You have to separate those things. And,
That's right.
I don't think there's anything wrong with owning your own home. If you want to do it it's a lifestyle, but it's it's like a toy. It's like anything else. It's like a car. It's like a boat. It's a and again, I've learned this from you, Grant, they're a liability.
100% it is.
It,
It is a liability. And
and
the emotion is similar to the car, the boat. The plane, even the plane's a bad deal. Okay. And a house is, and I know the audience that people do not get more excited about any topic than when I say a house is not an investment.
Yeah.
I own two houses. They are both terrible, terrible, terrible investments. And every time I go to say, I'm going to sell my place in Malibu because I never use it, I'm like, man, don't sell that place. Don't sell that place. That place is awesome. What the reason?
But that's okay. You can do that though, because if you've got the choice, if you can sell it or not sell it, it doesn't change your life. Then you can make those decisions.
Yeah, but I got $40 million sitting over there dead.
Yeah, doesn't feel good,
dude. That could buy $200 million worth of real estate.
Yeah,
the house in Miami here could buy the same thing, and I'd have $400 million working for me, growing in value rather than and getting paid the income.
Yeah.
You know, so I'm in a position to do that and be stupid, but it doesn't make it a smart thing to do.
Yeah. No, I own my own home, and my wife and I talk about it all the time. It's not the smartest thing. I was like, we could go rent someplace. We go live in a nice apartment and, roll this into a deal. It'd make more sense. We're doing it because, we can have a playground, and, that's where our kids like, and we're close to school. Doesn't make any sense investment wise. I mean, it's a money pit. We love it, but it doesn't make any sense.
There's something about saying I own my own home.
Yeah, there is. But it's emotional. It's great, but
Totally.
Still pay taxes on it. But hey, I want to switch just a little bit off of real estate. Grant, I've read, I think all of your books. I don't know, maybe I've missed a few, but I've gone way back in your catalog, and I learned, my dad's a sales and marketing guy. He would say that he kind of revolutionized the direct mail marketing back in the late 80s and early 90s. And, and so I asked him, he's a mentor. I have a lot of mentors. I consider you one of my mentors because I've listened to you so much. What is it about listening to sales tapes? When you're trying, you've made a decision, I want to get better at something. There's something about sitting in a car, listening to sales tapes, because you want that knowledge and you're breathing from a fire hose. Because I've heard, my dad didn't finish college. He was just running around, kind of a hippie in the 70s and 80s. Got an opportunity to sell some lake lots, and somebody gave him Zig Ziglar tapes, and he started just cranking out on. He just listened to him because he needed to make some money. I've heard you tell the story about you were working at the car dealership, and I don't know if this is you were struggling with kind of drugs and alcohol, and I forget which point in life you were, but I don't know if it was Brian Tracy or who, but you started listening to somebody, and you made the decision in your mind that you needed to improve. You had to change your life. But what is it about the process of successful people fast tracking their education, of just going deep by just listening to, and specifically, sales books or sales training? What is it about that consistency and that correlation between that method of success?
Yeah, I think it's about, a commitment to anything.
Yeah.
Okay. And then you have to saturate. You have to saturate your trillions of cells in the body, not just the brain, but in your body. You have to start saturating content and information. The school system, I spent 17 years at school. I got a little piece of data over here, another piece of data over here, another piece of data over here, one piece of data over here. There was no saturation. There was no commitment. There was no obsession with any one topic. So I become really good at nothing.
Yeah. I took 16 years of Spanish. I can speak Spanish un poquito still. Doesn't work. I was never saturated.
If you went and lived over there, if you went and lived in Spain or Portugal.
Exactly.
And everybody
complete
around
immersion.
Your immersion. It's an immersion. And so I was in sales. I was 23 years old, all the way from 15 to 23. I never learned it. I just was in it. I didn't learn how to do it. And I was around a bunch of amateurs.
Yeah.
Everybody around me was an amateur. They were all, nobody was committed to it. Not even the people. The guy got a sales card. He got a business card saying, I'm a salesman, kind of like real estate agents.
Yeah.
I'm a real estate agent, but you don't know anything about real estate.
Yeah. Yeah.
Most real estate agents don't know anything. It's the investors that know the stuff. Why?
Exactly.
Because they're committed, man.
Yeah.
They got their money. You got your money where your mouth is. And so when I was 25, I committed. Somebody told me about this guy, actually gave me a tape, like you referred to. Nobody knows what tapes are anymore, but gave me this little box. I threw it in my car. I listened to it. I was like, wow, this is amazing. I popped it out. I said, who is this guy?
Yeah.
It had an 800 number on it. I called the 800 number. Do you have any more products like this? And they said,
Mm-hmm.
yeah, we have a video program and you can watch it. I said, that's what I want to watch it and listen to it. And I said, how much is that? And they said, $3,000. I said, oh, let me call you back. I didn't have $3,000. I had no money. I don't think I had $30.
Yeah.
And I called my mom and I said, can I borrow $3,000? And she's like, is this for drugs? I said, no, mama, I'm done. I'm done with the drugs. I just got out of a treatment center for drug addiction. And I said, I promise you, I'll pay you back in the next, 6 months. And she's like, promise me this isn't for drugs. I said, I promise you.
Yeah.
And it was so humiliating, dude, to ask somebody for help. And I ordered the tapes. Now, this is back, I don't know, 40 years ago. The tapes wouldn't be there for like probably 14 days.
Couple weeks. Yeah.
Dude, there's no overnight.
Yeah. No Amazon.
The same day, Spencer, that I bought the tapes, I made $3,000. I made more money in one day. I don't know what it was about my commitment to my education. I didn't learn anything new. I hadn't gotten the data yet. I hadn't listened to them yet, but there was something about me making a commitment to my education. When those tapes got in, a couple Tuesdays later, I watched those every morning, every night, every morning, every night, every morning, every night. My boss didn't buy them. He didn't pay for them. I paid for them. And I became a student of that content and then would teach the content.
Yeah.
I went from being bad to good to very good to great. I didn't stop at great. I then became a master of the information, then started teaching angles on it, actually started being able to create on it. And it's like in karate or any of the Middle East
martial arts. Yeah.
Martial arts, you get belts, right? And you become a master at some point.
Yeah.
And so something that I was terrible at, I became very good at. But the thing that I became good at was not really the selling. It was the learning.
I was going to say, and being open, right?
It was the commitment. It was the commitment. Well, even being open. I know a lot of people that are open, but they don't stay open. Dude, you got to keep repeating it. Look, I took a $3,000 investment and listened to it probably 400 times without exaggeration.
Yeah. Oh, yeah.
Most people don't even listen to it the first time. They buy stuff. 83% of all books that are bought are never completed.
Yeah.
And I know people that buy programs and don't complete the programs.
No, the best books you gotta listen 2, 3, 4 times. I've listened to Be Obsessed or Be Average now, I think 4 times. I've had my team read it as well. We do a book club trying to push, because when you start learning, it becomes addictive. When you get the little nuggets, the golden nuggets, that you can kind of keep pushing the next level. There's just nothing like it. It's so motivating to find these tools and put them into action and see it translate to dollars, to money and results. There's nothing more addictive. Running, drugs, nothing like it, of seeing success and building upon that success, just keeping it going. One phrase that you mentioned.
Let me just say this. So, and that's why today, people don't understand why I'm out. We have about $4.3 billion worth of real estate today and growing. We think we can add 1,000 units in the next 30 days.
There you go.
And people are like, but why do you go from buying real estate to teaching these courses? And it is because, man, that guy that put those courses together when I was 25 saved my life.
Yeah.
The treatment center didn't save my life. Okay. The treatment center just gave me a place to get off of drugs for 30 days.
Yeah.
It was the next 30 years I had to worry about. Like, who am I going to become once you're not the loser that I was?
Yeah. Yeah.
There's a big gap between losing and being no one and having nothing to becoming the real version of yourself. There's a bunch of empty ground in between. I could have got lost in that. But that one tape, those $3,000, by the way, if they would have given them to me for free, maybe I would have used them as much. I don't know. But
probably not. No, that commitment to your mom. I mean, you made a decision in your mind. Something changed that day. Like, I got to do this. I can't let my mom down.
Yeah. Yeah.
And
So anyway,
saying things out loud, making those commitments. I mean, that's what locks you in and gets you to do something. I mean, again, it's something that I've seen you do, and I've done it myself. You know, you get in front of your team and say, "This is what we're doing. This is what I want to do." You're back. You're the pressure's on. You've got to
yeah, yeah,
deliver, or you're letting
yeah.
everybody down, or they're going to say this guy's full of it. We're not going to believe him. So it's powerful. You got a phrase, duty, purpose, obligation. It's been really powerful for me. I don't even know if I interpret it the right way. What is duty, purpose, obligation? What does that mean to you, Grant?
It means it's not an option. The saying is success is my duty, and my obligation.
Yeah.
Success is my duty. It's my duty. It's not a choice. It's not an option. It's not a variable. It's not am I vegan or meat eater, dude. Success is way more important than what food you eat, the supplements you take. Like success to me is like oxygen. I have to have it. It is necessary for me to feel good about myself. You know,
Yeah.
I want success. For me to be a good example to my kids, I want success. I
Yeah.
don't want to lose in life. I want to win. I want to have more wins than losses, which makes me successful.
Yeah.
And whatever that means to somebody, like it doesn't mean you have to be rich. It doesn't mean you have to have a house in Malibu. It has nothing to do with money really. Now, that being said, if somebody is going to give me advice on anything, I was in a Bitcoin room last night.
Cool.
And I asked the guys, how much Bitcoin do you own? What does that matter? I'm like, bro, like it matters to me. Like if you just bought one Bitcoin this week, I don't want to listen to your advice.
Yeah.
But if you've been buying Bitcoin since the beginning and you actually own some, now if you've been buying it or saying you've been studying it for 14 years and never bought any, I don't want to listen to you either.
Yeah. Yeah.
I want to listen to people that actually
Go
eat the
all
dog.
in.
Yeah, exactly. So,
Exactly.
so that's why the amount matters. Okay. Like if you're going to give me marriage advice, are you married? If you're going to give me fitness advice, you're overweight, bro. It's hard for me to listen to you. Like, I just want to know, hey, that the information worked for you and you used that information. Like I listen to Warren Buffett, Warren talks about investing money in ETFs. And then I'm like, yeah, but you never did.
Yeah. You go takes big positions in companies.
Yeah,
Massive
exactly.
positions.
Like it sounds good, Warren, but everybody would be better invested to do what Warren does, not what Warren says.
Yeah. Hey, that brings up a question I want to ask you. I've heard the phrasing, you build wealth through concentration and then you preserve it through diversification.
Mm-hmm.
One, do you think that's true? And then, for yourself, when do you make that switch? You're making, you at a point, you're making a lot of money, and I'm in a position right now, I'm still in wealth creation mode. I'm trying to buy deals, but at what point do you say, all right, I need to start, stocking some of this away and diversifying? But your returns are going to go down when you start diversifying.
Yeah. Well, if you study wealthy people, as you know, dude, they get rich by being invested in one thing. It is not many things. The wealth is not created with many things. It is created by going big on one thing.
100%.
In Las Vegas was built on the backs of many bettors, not a handful.
Yeah.
And so it's all the small bets that make Las Vegas what it is. And the same thing for the stock market. It's the small players that make the stock market worth, quadrillions of dollars.
Yeah, that's how the billionaires make more billions, is taking advantage of the retail folks.
Yeah, look at
Ken
Bitcoin.
Griffin.
Look when they offered ETFs on Bitcoin, it exploded the value of that because now you have all these little players buying pennies of it.
Yeah.
So
are you in crypto? Are you in crypto, Grant?
I own some. I'm actually very excited about it because to me it's very real like real estate, except it doesn't provide the cash flow and the tax and the depreciation.
Yeah. Yeah. Exactly.
But I like Bitcoin better than I like gold or silver.
Yeah, a lot easier to move around. That's for sure.
Yeah.
People are actually kind of using it. So it's,
yeah, but back to the immersion and the concentration, right? Look, I would get rid of everything right now to buy 12,000 apartments. If I could double my portfolio right now, I believe in real estate so much that if I could dump everything, every single penny I had and load up into like A plus location properties, whether they're B or C, it doesn't matter. A
Yeah.
plus location
Yep.
property, positive job growth, rent. If I could buy below replacement costs, it'd be nice if it was below the last trade.
Yep.
15 to $1,800 rents. What's the average rent in Indianapolis?
Around 1250 right now
Yeah, so
in
if I could
Indy
be somewhere in
for
that
two bed.
1250, if I could be in that 1250 range, um, a little higher than that wouldn't even bother me if it's a
No.
core product and great amenities.
Yeah. Core is
Um,
going to go 18, 1900
and
plus or minus.
if I have if I'm your age and I'm waiting 10 or 20 years, I'm gonna load up every penny I have. I would dump my retirement accounts. I would dump my Bitcoin. I would dump all my gold, all my cash. I would borrow to do it. I would raise money to do it and know that 10, 15, or 20 years from now, rents are going to explode in this country.
Yeah. I'm with you, Grant, 100%. Right now, we've got a deal under contract, put under contract about 30 days ago. We've turned over every stone. We finally found a deal that penciled. It's kind of our backyard, Evansville, Indiana, which
Yep.
is it's got growth, moderate, but there's like no new supply. Incomes are growing, jobs are growing. We're in a pocket of growth. We're buying it for 101,000 per unit. So I
Wow.
mean, just like fraction of replacement cost. Built in the mid 80s, still in good shape though. We're going to go in, renovate it. We do value adding kind of core plus stuff. $17.5 million raise. Got about 2.5 to go. Trying to finish it out in the next like 15 days. You do this all the time. I mean, you're the master. I've seen you've raised millions of dollars in a room. It's incredible.
Yeah.
You have any advice for me and the team?
Yeah.
We're cranking the last couple of weeks. We got 2.5 to go. We've raised about 13.5.
Yeah, you should do a Zoom call with your investors. I don't know if you've tried that or not.
Yeah. Yeah, we do. We do webinars. I hear your omnipresence philosophy, and I think it's the way to go. So we're just punching out content, tours, webinars, meetings, calls, emails, texts.
Yeah.
What do you think is the next thing to?
Yeah, I would definitely go back to the people that have already said yes to you and tell them why this is a better deal. I think second money's easier than the first money.
Yep.
And then I would I would spend some money on a webinar to bring in new investors.
Yeah.
The promotion piece is what you have to get right. The promotion piece on the front end to get the traffic right to see the deal.
Yeah.
Third is I would do some live events. I would do some live events in the marketplace about the deal.
Yeah, we haven't done that yet.
And so I would do a podcast, I would do webinars, I would do Zoom calls. How many investors do you have now?
So in this deal, we've got about 65.
No, in all deals.
All deals, we've got about 300 kind of across all of our deals.
I would definitely do a webinar. I would take and split and do a webinar for maybe 20% of those people that are extremely, special maybe in some sort of way, and then do one for the rest of the audience and talk to them about why this deal's so special. And I would have all the money raised by Saturday. I wouldn't take the 2.5 weeks. I would never give myself the time I actually have on anything.
No, 100%. Yeah, no. And the 2.5 is a little artificial deadline also. Okay. But we technically have got more time, but you interested, Grant?
Anybody have more time either. I would lie to everybody around me.
It's next week. It's tomorrow.
Yeah, exactly.
What are your thoughts? You're looking to make any allocation, Grant? You want in?
I have to see the deal, bro.
Want to see the deal?
Great. It sounds great.
It's 17 IRR, 2x. It's got 4 to 7 years the time horizon, but we get the option to hold longer. But that's kind of for the reason investors want to know kind of when the money's coming back. 4 to 7 years, 17 IRR. I mean, the replacement cost in the market, well north of 200, 250 plus.
Yeah. Nobody's ever going to build it again.
Never. They can't. It's got all the amenities. I'll shoot you the deal. But
shoot me the deal. I love your marketplace. Okay. My wife's going to Columbus on, where's she going? Columbus, Akron? Where's she going? Somewhere in Ohio.
Yeah.
To support Bernie Moreno's Senate run.
Okay. Cool.
But I was telling my wife the other day, she's like, why do you like that part of the world? Dude, this is middle America, man. It is the best part of America. The family values, stability, jobs, work ethic, morals, like those markets are where you want to be. Okay. like we were looking at some deals in Atlanta. I'm extremely concerned about Atlanta. Atlanta feels like a damn,
Yeah, it's a dumpster fire.
huh?
Dumpster
Yeah,
fire. I mean,
feels
the
like it wants to
evictions, the
explode at any
delinquency,
time.
it's tough. It's rough. No, I've talked to some people in Atlanta. I mean, you can't evict anybody in Atlanta. You got to get a marshal to go out to get somebody out, and the
Got to
delinquency
bring
is
the
like,
National Guard with you.
yeah, good luck. Yeah, better take the National Guard. No, the
But
Midwest is blowing up. I mean, the amount of manufacturing that's coming back into the United States in the Midwest. I mean, there's an EV plant, a semiconductor foundry popping up all of our markets all the time. It's wild. So I definitely recommend taking a look. Let us know. You want to come to Indy? Give you the tour.
okay, no, I do, dude. Like I told you the last time we talked, I said, man, could I
Just
buy
hit me
1,000
up.
units up there?
Yeah. Oh yeah. There's a couple deals. Hey
Who's
Grant,
who's the master broker over there? Who's the guy? Who's the genius broker in Indy?
I'll get in trouble, but by volume, it's the new CBRE team: George
Yeah.
Tikajan, Hannah, Cameron Benz, those guys.
What's
Make an
his
intro.
name? What's his name?
George Tikajan.
Okay.
He does the most volume by far. Great folks. There's a lot of good brokers.
Yeah.
I can introduce you to everybody. It's a small world.
Yeah. And then what markets in Indy? Like are you thinking Indy? You thinking, was it
Suburbs. So I mean, the suburban Indianapolis and the northern suburbs, Hamilton County, Boone County. I mean, there's $60 billion worth of new projects going on just in northwestern Indianapolis, just in suburban Indy, kind of between Indianapolis and Chicago. All the suburbs are good. Downtown, I'd avoid. Kind of in Indianapolis, there's some real pockets, but I'd go to the suburbs. They're growing like crazy. Investors from the coast still aren't coming
on
in.
On a clock, Spencer, where if the center of town, it's the center of the clock, where on the clock?
10 to 2 is the best. 10 to 2 is the absolute best. But then if you go over kind of 9 o'clock is pretty decent. And then kind of further, I'd say kind of 5 o'clock south, kind of in the Greenwood submarket. But the northern suburbs, they've been growing. People have been paying stupid money for those deals for years. It's hard to get in. You have to pay up to get in, but people continue to pay up. That's where all the growth is, the jobs. That's where it's all going. It's growing fast. It's just as fast as any Sunbelt metro. It's just it's in the Midwest. So nobody's heard about it. Fly over state, get a decent cap rate.
Yeah, like what cap rate? Like let's say I'm buying something built in 2020.
2020, it's going to be probably mid fives. I don't see much going under 5, but mid fives right now.
Yeah.
Broker's going to say it's a 6, on some BS.
Yeah. George is going to say it's a 6.
Yeah. Yeah. But they're great guys, but brokers are brokers.
Ohio. No, Canada.
A little different.
Ridiculous. Looking. It's crazy, man. I asked somebody in my office where my wife is flying to in Ohio, and they say Toronto. I'm in trouble, bro.
Yeah, somebody's got to figure it out. Well, Grant, you've built an awesome reputation. You've built an incredible business. Again, I just want to thank you because a lot of my education is done just, on planes, in cars, listening to, whether it's your books on closing and just, I don't know, just like you said, the immersion, just.
What's the dumbest thing you ever heard me say, Spencer, when you were listening to something?
I'll be honest. You said a handful of questionable things, Grant, but it's, you gotta look past that.
No, but what's the one thing you said, bro? Because I have said a lot of stuff in 30 years.
I'm trying to think in be obsessed or be average. I'm trying to think when you got really, you got aggressive in a couple parts. The one thing, there's some things on family, which I see you spend a lot of time with your kids and your family, you prioritize it, but you have to make some of those decisions of, you can't necessarily spend 100% of your time, with your family. And so you spending time with your kids, they don't need 6 hours with you every single day. You don't need 10 hours with you. You need to spend some time. You need to spend quality time. And remember in the book, you're like, I make time in the morning, go get breakfast with my daughter, take her to school, whatever it is. But you don't need it to take, 6 hours. At the time, I was like, I wasn't sure because I had, new kids at the time. I have 3 daughters. And so, in my mind, I'm like, is that right? But just like everybody.
Yeah. So I was saying, I know what I said. I said, somebody said, hey, family first.
Yeah.
And
you're like, no,
family ain't first, dude. I'm first.
Yeah.
Me first. Me first. And by the way, when I'm doing this stuff, like I've been talking on tapes or audio program, I'm trying to learn for myself. I'm most of
Yeah.
the time I'm really talking to me.
Yeah.
But I remember some guy said to me, family first, Grant. I'm like, no, me first,
Then I can take care of my family.
then my wife, and then the kids.
Yeah.
Like I was there before my wife was there. If I don't take care of me, but anyway, I say these crazy things and then people challenge me on them later, but whatever. Hey
Yeah.
man, I appreciate you, Spence.
No, I appreciate you, Grant. Thanks a lot for coming on. Let's get back in touch sometime soon. Let me know when you want to come in Indy, and I'm going to send you over the deck. So
Yeah, good. And then now when you say between 10 and 2, what are the cities that I'm looking? Is it
Yep.
Indianapolis proper that I would be investing
No,
in?
so I would be looking at Lebanon, Carmel, Fishers. Those would be kind of the three, and just Hamilton and Boone County. Those are the
What's
markets.
wrong with Indianapolis?
Nothing's wrong with it. That's just where the most growth is. There's some real pockets, but you just have to be. I mean, it's more kind of block by block, neighborhood by neighborhood in Indy. Like there's some good stuff in the Broad Ripple neighborhood. There's pockets of downtown that I really like, but you got to get the right location.
Yeah.
And so I just can't say blanket Indianapolis, but I mean the suburbs, they're on fire.
And then when I slide over to Ohio, do you know anything about that market?
And we've been done some deals in Ohio. It's challenging because of the taxes, the way they do taxes there, and the school districts will, sue you to try to get the tax revenue. Love Cincinnati, Columbus, south of Dayton, not necessarily Dayton proper, but a little bit south of Dayton on the way down to Cincinnati. Love all those markets. Not as big a fan of Cleveland. You can get some good cash flow there, but just the growth isn't there. I'm sure there's some good pockets. I just don't know it, but that's where we're looking right now.
All right, brother. Hey, well, cool. Send me that deal, man.
Yeah, man. We'll get you on it. It's good stuff. You remember, you got to load up right now. This is the time to go in.
Let's go.
I'm gonna hold you to it. All right, Grant. Really appreciate it, man. Have a good one.
Brother.
Talk soon.
Appreciate it.